How to remove all negative items from your credit report for free. Many lenders require at least a 680 FICO score in order to receive a good rate mortgage or a car loan. A few points below, and you're considered a higher credit risk consumer, which translates into a much higher interest rate. There are many credit data that compose your FICO score. This data can be grouped into 5 categories as outlined below. The percentages in the chart reflect how important each of the categories is in determining your FICO score. Sure you've seen that before. There's payment history, which is 35%. Account payment information on specific types of accounts, like credit cards, retail cards, installment loans, mortgages. There's also a presence of adverse public records, like judgments, liens, suits, wage attachments. There's also collection items and or delinquency, past due payments. The severity of the delinquency, how long has it been past due? The amount of past due on delinquent accounts and collection items. Number of past due items on file and number of accounts paid as agreed. Then you have amounts owed. That's another category, which is 30%. Amount owing on accounts. Amount owing on specific types of accounts. Number of accounts with balances. Proportion of credit lines used. Proportion of installment loan amounts still owing. Then you have length of credit history. How long have you been on file? How long have your accounts been open? Then there's new credit. Number of recently opened accounts and proportion of accounts that are recently opened. Number of credit inquiries, recent. And then there's types of credit used, which is a credit mix. The number of various types of accounts, like credit card accounts, retail accounts, installment loans. You want to have 2 to 4 bank credit cards and 1 to 2 retail cards to be optimal. That's what FICO says. That was from that first book I read. How to boost your score 100 points plus in 30 days. That's where I got that. 2 to 4 bank credit cards and 1 to 2 retail cards is optimal from FICO's, what FICO says. And then these are things that are not considered in your FICO score. Your race, color, religion, national origin, sex, marital status. U.S. law prohibits credit scoring from considering these facts, as well as any receipt of public assistance or the exercise of any consumer right under the Consumer Credit Protection Act. Your age. Other types of scores may consider your age, but FICO scores don't. Your salary, occupation, title, employer, date employed, or unemployment history. Lenders may consider this information, however, as many other types of scores. Where you live, any interesting rate being charged on a particular credit card or other account. Any interest, I just read that. Any items reported as child family support obligations or rental agreements. Certain types of inquiries. The score does not count consumer-initiated inquiries. That's requests you have made for your credit report in order to check it. It also does not count promotional inquiries, These are requests made by lenders in order to make you a pre-approved credit offer. Or administrative inquiries, which are requests made by lenders to review your account with them. Requests that are marked as coming from employers are not counted either. Any information not found in your credit report, any information that is not proven to be predictive of future credit performance, whether or not you're participating in a credit counseling of any kind. Next chapter is credit inquiries. Will my FICO score drop if I apply for new credit? If it does, it probably won't drop much. If you apply for several credit cards within a short period of time, multiple inquiries will appear on your credit report. Looking for new credit can equate with higher risk, but most credit scores are not affected by multiple inquiries from auto, mortgage, or student loan lenders within a short period of time. Typically, these are treated as a single inquiry and will have little impact on the credit score. What is an inquiry? When you apply for credit, you authorize those lenders to ask or inquire for a copy of your credit report from a credit bureau. When you later check your credit report, you may notice that their credit inquiries are listed. You may also see listed their inquiries by businesses that you don't know. But the only inquiry that count toward your FICO score are the ones that result from your application for new credit. Does applying for credit affect my FICO score? Fair Isaac research shows that opening several credit accounts in a short period of time represents greater credit risk. When the information on your credit report indicates that you have been applying for multiple new credit lines in a short period of time, as opposed to rate shopping for a single loan, which is handled differently, as discussed below, your FICO score can be lower as a result. How much will credit inquiries affect my score? The impact from applying for credit will vary from person to person based on their unique credit histories. In general, credit inquiries have a small impact on one's FICO score. For most people, one additional credit inquiry will take less than 5 points off their FICO score. For perspective, the full range for FICO scores is 300 to 850. Inquiries can have a greater impact if you have few accounts or a short credit history. Large numbers of inquiries also mean greater risk. For people with 6 inquiries or more on their credit reports, can be up to 8 times more likely to declare bankruptcy than people with no inquiries on their reports. While inquiries often play a certain part in assessing risk, they play a minor part. Much more important factors are your score, are how timely you pay your bills, and your overall debt burden as indicated on your credit report. Does the formula treat all credit inquiries the same? No. Researchers have indicated that the FICO score is more predictive when it treats loans that commonly involve rate shopping, such as mortgage, auto, and student loans, in a different way. For these types of loans, your FICO score ignores inquiries made in the 30 days prior to scoring. So, if you find a loan within 30 days, the inquiries won't affect your score while you're rate shopping. In addition, the score looks on your credit report for rate shopping inquiries older than 30 days. If it finds some, it counts those inquiries that fall in typical shopping period as just one inquiry when determining your score. Your FICO score calculated from older versions of the scoring formula. This shopping period is any 14-day span. For FICO scores Calculated from the newest version of the scoring formula, this shopping period is any 45-day span. Each lender chooses which version the FICO scoring formula it wants the credit reporting agency to use to calculate your FICO score. Want to know about rate shopping? Look for a mortgage, auto, or student loan may cause multiple lenders to request your credit report, even though you are only looking for one loan. To compensate for this, the scoring ignores mortgage, auto, and student loan inquiries made in the 30 days prior to scoring. So if you find a loan within 30 days, the inquiries won't affect your score while you're rate shopping. In addition, the score looks on your credit report for mortgage, auto, and student loan inquiries older than 30 days. If it finds some, it counts those inquiries that fall into the typical shopping period as just one inquiry when determining your score. For FICO scores calculated from older versions of the scoring formula, this shopping period is any 14-day span. For FICO scores calculated from newest version of the scoring formula, the shopping period is any 45-day span. Each lender chooses which version of the FICO scoring formula it wants the credit reporting agency to use to calculate your FICO score. Improving your FICO score. If you need a loan, do your rate shopping within a focused period of time, such as 30 days. FICO score is distinguished between a search for a single loan and a search for many new credit lines, in part by the length of time over which inquiries occur. Generally, people with high FICO scores consistently pay bills on time, keep balances low on credit cards and other revolving credit products, apply for and open new credit accounts only as needed. Also, here are some good credit management practices that can help you raise your FICO score over time. You can reestablish your credit if you have had problems. Opening new accounts responsibly and paying them on time will raise your FICO score over the long term. Check your own credit reports regularly before applying for new credit to be sure that they're accurate and up to date. As long as you order your credit reports through an organization authorized to provide credit reports to consumers, such as MyFICO, your own inquiries will not affect your credit score. So that's the end of that chapter. We'll start the next chapter next video.